Hey everyone, welcome to this week's release of the Hashrate Happy Hour podcast. Today's podcast is brought to you by our sponsor, the Texas Blockchain Council, a Bitcoin-first, nonprofit industry organization working to make Texas the jurisdiction of choice for Bitcoin mining and blockchain innovation. They will be hosting North America's premier policy conference for Bitcoin and the digital asset ecosystem on November 15th through the 17th in Fort Worth, Texas. For more information, please visit their website at texasblockchaincouncil.org. On today's show, my guest is Chris O'Donnell. Chris is the Director of Power and Environmental Strategy at CWP Energy Solutions. CWP aims to help clients optimize revenues and mitigate risks associated with renewable and energy storage investments. They achieve this through services including AI-enabled active asset management, computing infrastructure optimization, battery storage optimization, and price certainty products/project valuation advisory. With a customizable and client-focused approach, CWP Energy Solutions strives to ensure that your portfolio is managed effectively and your assets are protected from market risks. Chris is also coming to this conversation with nearly a decade of power industry trading and business development experience, and so his perspective on how Bitcoin mining is starting to enter the renewable energy scene is an extremely valuable one. During today's show, Chris and I talk about how his company's mandate to build out a renewable energy book was actually what facilitated the move into working with Bitcoin miners. We also talk about how Chris's perspective on the next 2, 5, and 10 years of evolution in the energy industry and how Bitcoin mining will be playing a role in that. We then discuss what the hell the duck curve actually is and how it might be coming for ERCOT and how Bitcoin mining can help smooth that demand curve out. And finally, we wrap up the discussion on what challenges Chris foresees in the convergence of the energy industry and the Bitcoin mining industry in the near future. This was one of my more enjoyable conversations for the show. Chris and I could have easily cracked another beer and recorded a whole nother hour talking about all of this, but we ended up having to wrap it up, and so we most likely will have to record a second episode in the near future. And so with that, please enjoy my conversation with Chris O'Donnell. Hey everybody, welcome back to the show. Like I said in the introduction, I'm here with Chris O'Donnell with CWP Energy Solutions. Chris, welcome to the show.
Ben, thanks for having me. Pleasure to be on here, and I'm definitely following up a pretty star-studded cast, so hope I can hold my own.
Well, I'm excited to have you on, and yeah, we've had some pretty awesome, heavy-hitting guests on the show. I have no doubt whatsoever that you will live up to that, probably exceed that. You know, Chris, I'm also really excited. This is actually, for the name of the show, the very first actual happy hour recording. So cheers, virtual cheers for the listeners. We're doing this virtual, and we both have a beer in hand, which is phenomenal and a great way to end the day. So Chris, what I'd love to start with is what I like to do is kind of lay out a background for the audience so that they can better understand where you're coming from and what your experience is. So can you maybe walk us through some of your professional background, what led you to CWP Energy Solutions, and then also, I always love hearing, how did you get into Bitcoin mining?
Certainly. Yeah, for me, it's maybe a little bit more of a visual track than others, but my uncle was heavily involved in trading, and I was always very attracted to all the red and green colors and just the chaos. Could just be more the ADD speaking, but in the end, I went to Rutgers. I did finance and economics there, and to me, I always wanted to go into the trading route. I was working as a statistical analyst at PSE&G, the large utility in New Jersey, and did quite a bit of work for them, but always had ambitions to go onto the energy trading floor, and fortunately got a position, became an analyst there, And my job there was basically take all of the different aspects of the energy trading business, load side, generation side, and actual trading side, um, and then figure out how much money we made that day. And so that really got me into the weeds of a lot of the ISO tariffs, the regulations of the market, what works, what doesn't go work, and essentially, kept going there, and went on to become one of the 24/7 traders. In that role, we managed a lot of assets, from small trash burning assets all the way up to small hydro and solar, wind, and then all the way up to coal, gas, nuclear. Um, so on those shifts, you're working either 5 a.m. to 5 p.m. or 5 p.m. to 5 a.m. There's no such thing as weekends. There's no such thing as holidays. You grow pretty close with the people that you're working with, but you get to see so many different days in the energy markets and so many different conditions, and that really builds a strong groundwork in how the markets work, how people earn money, how people lose money,
Yeah.
and that kind
Yeah.
of started to facilitate the whole process and what's become today. Um, so from that moment, I went and left and went to an environmental commodities trading shop. And I was tasked with building a power and gas trading business for them. Um, to only kept, I had to synergize with their environmental commodities trading business. So that really opened up the black box of solar, wind, RECs, basis risk, curtailment. Where do I site my project?
Mm-hmm.
And I think working with a lot of those clients to help them reduce their risk, um, teach them how to extract or diversify their revenue streams, built this vision for what has now become CWP Energy Solutions. Um, so I left that company in just before in about 2020. I went to build this vision on my own with two private equity guys, and then realized that the amount of collateral and expertise we really needed to diversify. And I went to a lot of different companies and funds, and in the end, I thought CWP Energy had a fantastic reputation by being, a large data-backed and focused shop. They were extremely qualified at quantitative trading, and I thought they had a lot of the data infrastructure and expertise in-house to really position ourselves well for the grid of the future. And the grid of the future is renewable intermittency, it's decreasing baseload generation, um, and it's increasing volatility severity. And you need a lot of expertise and a lot of backing, both statistically, data wise, but also human touch wise to kind of navigate that. So that's what brought me into CWP, and now I head up the client facing business, which is called CWP Energy Solutions, which I'm sure we'll get into.
Yeah, we will. We certainly will. That couple of things in there that are just wild to think about. So it was literally 24/7, 365 trading. That's pretty wild. I'm not in the trading world, so I mean, hearing that is like that's brand new news to me.
Yeah, in the end, electricity is 24/7. I think a lot of people are shocked to hear that, but you're sitting on a desk with two or three other guys making decisions that have, 10 to $100 million impact by yourself, and what you start to learn is through mistakes and opportunities very quickly. So, I strongly encourage anyone, and when we're looking to hire people that come from a 24/7 desk background, I think that puts them leaps and bounds ahead of other people that have maybe come from different backgrounds, just due to that kind of strenuous work.
Yeah, no, I can absolutely see that. I mean, they've been stress tested to the max. What facilitated Bitcoin and Bitcoin mining into your career path? Because your focus at CWP, or one of the things that you guys are helping ushering in, is Bitcoin mining and really this flexible load. What What got you into that?
Great question. Yeah, it certainly wasn't on my career path when you look back at that move in 2020. But I'd say in 2021 is when I helped found CWP Energy Solutions with my boss and CWP Energy's president, Alain Brizois. And the mandate was to focus on building a renewable energy client book and helping augment asset management teams at renewable energy companies to better manage their risk. And it just so happened there was this little event called Winter Storm Uri that happened during that, and that really threw us right into the fire. And we helped several clients that had these fixed shape hedges. So and essentially, if their asset is not generating, they have a net short position in ERCOT, and we help them navigate through all of that chaos that ensued from Winter Storm Uri. And successfully doing that, we had a lot of these clients come and say, "Hey, you guys need to commercialize this business. You know, there's a need in the market. The renewable developers are building projects as fast as they can, and they have some of them have their own internal asset management teams, but they need trading expertise and data to help make those decisions to help manage these risks." And that started to parlay into, hey, can you help me on the long term with my power purchase agreements?
Mm.
Can you help me? My node has been, in single digits or in negative territory. And we actually had some cheaper wind PPAs that we were looking to find a buyer for. And so I started putting some feelers out there, and miners actually started, reaching out and saying, "Hey, I I know that you guys are focused on managing curtailment risk for wind assets, and we would love to site a mine there." And my whole thought process was like, well, we have this cheap PPA. Would you be willing to buy it? And they're offering higher dollars than anyone else was. And then everything changed right before the Miami Bitcoin conference in 2021. And essentially, gas natural gas prices went through the roof.
Yep.
Our cheap PPA almost quadrupled in value, and that was no longer on the table to be sold. But we were still managing a lot of curtailment risks, and miners reached out and said, "Hey, we'd love to, partner on some of your client projects. And oh, by the way, do you have any power data? Do you work in, the power space and can help us navigate this?" And I reluctantly got a blessing from our senior leadership to go to the Bitcoin conference in Miami and have the conversations with folks. And the rest is history. I think I'll give a shout out to Cam from Foundry. He comes from an energy background, but we were able to kind of cipher or translate, through that, and started to build a relationship that's well known with Foundry right now, and now we work with several miners, kind of navigating the space and making our power data available, and going from there.
Oh, that's fantastic. What's cool about how this all came, onto your plate, or even just became a industry that you were interested in, is because they approached you in this most current role, and then CWP Energy had the flexibility and the wherewithal to adapt it and let you run with it. So that's really exciting to hear that. It's always nice to hear when the companies, are open to. I mean, Bitcoin mining, it's new, and it's not something that the energy industry, especially the renewable industry, has ever seen before. I mean, it's a completely new beast. So that's awesome. With that being said, so you guys are, really front and center on the energy industry. You mentioned, building out that renewable book. Where do you see the energy industry evolving over 2, 5, 10 years? there is a huge mandate from the president to expand renewable projects and be carbon neutral or carbon free. What is the evolution look like, and how does Bitcoin mining play a role in that?
Probably the
It's a
the
big
billion dollar
question. Yeah,
question.
yeah, that's a big question.
um, from where we see, after what happened last year, we see a full reset in the market. Gas prices have come down. On the Bitcoin side, Bitcoin went through a lot of volatility. Miners went through a lot of volatility. Those that came out the other side, I think you have to tip your cap to them. Um, and on the energy industry side, you obviously have the Inflation Reduction Act, that is facilitating a lot of investment, both public and private. And then you have the big, I guess, maybe bottleneck, which was last year's bottleneck was the supply chain. This year's bottleneck, and more probably last year's bottleneck too, is the interconnection. There's so much money that wants to invest in renewable energy, facilitate projects getting built, but there's only so many projects that can be built. And if you look around and see all of the renewable energy companies that are popping up, or even the large incumbents, and you look at a lot of the studies that are coming about 20% of projects actually get built. And there are a lot of reforms that are coming along that can help expedite and facilitate the process. But in the end, that's going to be a slow moving process. So what's really happening is you have a lot of your base load coal um, sticking around because of the past year and a half, 2 years. Baseload coal was relied upon heavily to keep voltage control on the system, and also to more or less keep the lights on. And now, once we've kind of come out of that cycle, you see a lot of the push to retire some of these
Yeah.
plants.
Yep.
There's a lot of incentives for battery storage to be built out. And sure enough, in states like California, we're seeing a lot of storage. ERCOT is, kind of been pushing as the next state to really incentivize battery storage. And then, of course, what we see is a ton of renewable and solar build out, despite the delays. And what that means for us in the grid of the future is a lot more renewable intermittency. And if you have that base load coal or base load generation coming offline, that's going to mean increasing volatility severity, albeit with decreasing volatility frequency. And what that means is most people who have assets, whether it's a Bitcoin mine, a data center, battery storage, wind, solar, those people need energy expertise in order to manage the fluctuations in the market. And I don't think it's a secret to anyone that knows nothing about our industries that weather events, these 1 in 100 weather events, are
Yeah.
occurring more and more frequently.
Yes. Yep.
So it really comes down to when you have a grid that is challenged with a lot more volatility, and the stakes are higher, and there's a lot of capital investment that's taking place. Oh, how are you positioning yourself to manage through a bad cycle? Because if there's anything we know about the Bitcoin side of things and the Bitcoin mining industry and the energy industry, one thing is true. These markets are cyclical, and the cyclical nature of the markets is going to continue. And I see, 2 years from now, we're probably looking at a similar grid to today. 5 years from now, we're looking at, sometimes or I should say, 5 years from now, we're probably looking at some days of about 90% of renewables powering, markets like SVP, maybe even ERCOT for that. And what happens if the wind doesn't come in as high as expected, or there's a bit more cloud cover that limits the solar production? What are those jumps in prices going to do? And if you don't have resources that can balance out the grid, like controllable loads or like storage, and participate in those types of programs, then the grid is going to be, pretty constrained um, in what it can do.
Sure. Yeah. And that all makes sense. So I see what you mean. So, 5 years from now, there's going to be, a lot of those projects coming to completion, renewable projects, that is. And, with those, you're going to have flexible load that enables them to smooth out the ups and downs there. Just quick checking question. That mechanism is Bitcoin mining, keeping peaker plants running smoothly so that they don't have like ups and down fluctuations, and then they come offline when the peaker plant needs to direct their energy to the grid. Is that what you mean by smoothing out that intermittency from renewables?
Yeah, I think it's two separate things. I think you bring up a good point there. Peaker plants are going to be increasingly necessary on the grid. You only have to look at California and see
Yes.
the
Yeah.
articles that have
Yeah.
come out regarding the duck curve. Everyone's in a split camp on this, but we believe that the duck curve is coming to ERCOT, and peaker plants are going to be relied on to serve those ramping spikes. Um, but what happens with the Bitcoin mining side of things is they provide a price floor and they provide stability during periods of high renewable penetration. And they keep that curtailed and stranded energy from turning off. And those investors, or I should say, those project owners of wind or solar, they are beholden in the end of the day to tax equity investors. And the corporate off takers, or whoever their off taker is, they have ESG mandates that they've promised to their public shareholders. So when the wind farm spins and produces their megawatt hour, it doesn't only produce a megawatt hour of energy, but it produces a production tax credit and it produces a renewable energy credit. And if the market signals via price, negative 30, negative $40 prices for the wind farm or the
Yep.
solar farm to curtail, that tax equity investor doesn't get his production tax credit. That corporate off taker doesn't get their renewable energy credit. And that starts to put a strain on the whole financing system. And that's something that we look to address financially with our financial hedging and trading and offering strategies to the market. And that's something that Bitcoin mining does from the physical side. It goes into areas and it creates a long-term solution. So if you have wind farm, 1 through 5 in your area, and wind farm 1 has a Bitcoin mine or a data center or some type of controllable load on it, and wind farm 2 through 5 don't, which one is the money going to flow to? And despite anyone's views on Bitcoin mining or Bitcoin in general, all of the financial investors would choose option 1 because that asset can run through curtailment periods, and that asset is going to produce more production tax credit for them, and it's going to be producing more RECs for their off-taker, and that wind farm is going to be able to survive during periods of low gas prices and high wind. And in the end, it's about survival for a lot of these high renewable penetration areas more than it is about revenue.
I'm so glad that you brought that up, and I really appreciate you going into that because I think the renewable industry is going to wake up to that in a big way. I know that, I mean, that is what you guys are doing, is you're bringing that solution set to this industry. So I'm excited to see that because I think it's really going to change the narrative around Bitcoin mining's energy use and what it's doing for the renewable sector, and a lot of cool stuff in there. You brought up the duck curve. Chris, I'm from the Midwest. I'm in Minnesota. I don't know what that is. Just hard stop. I'm not even familiar with that. I've heard of it. I'd love for you to give me and the audience what is the duck curve.
Yeah, so the duck curve actually does look like a duck, believe it or not. Um, And essentially what it is, and it really started out in California. California incentivized a lot of solar to come online. It's obviously a very attractive state for solar. And basically what happens is, you have your load curve, which, typically looks, like dips through the overnight period as people are sleeping, lights are off, companies are shut down. As people wake up, businesses start running, aluminum smelters start running, processing facilities start going. You have increasing load in the morning, which is I would refer to as a ramp hour. And then during the middle of the day, either the people going out to lunch, in the winter, there's, strong dips, as businesses are kind of running as usual. In the summer, it's more of a, increasing curve. There's, only one, there's two peaks in the winter. There's only one peak in the summer. And essentially what the duck curve is, when you get past that ramping hour at 7, 8, 9 a.m. in the morning, all of the solar comes online
Yep.
and there's an oversupply in the market and there's not enough demand to soak up all of that solar generation. So what the market starts doing is sending increasingly less price signals. And the price signals don't stop at zero, as some people seem to think. They can go all the way down to severely negative pricing because the market is trying to signal to generators, we do not need your generation. We do not have enough demand for it. And the grid has to remain balanced at 60 hertz frequency. That 60 hertz is when supply of generation equals demand for consumption of electricity. And so the duck curve essentially is saying the market is oversupplied. They're sending negative price signals, signaling the generators to turn down. And then, believe it or not, when the sun goes down, everyone gets home from work. There's a ramping hour in load. The demand for electricity rises, but all of that free renewable generation is coming offline. Therefore, in order to keep up in supply and keep the lights on, you need to start ramping up, like you brought up earlier, gas peaking plants, sometimes even oil plants, anything that can ramp up quickly, which is what battery storage is being brought online to solve and smooth out that curve is what's needed. And we're starting to see that in ERCOT right now too. There is a lot of wind penetration in ERCOT. There's still a lot of base load, but there's still a tremendous amount of solar. And we're starting to see those ramping hours in the morning get increasingly more pricey, and in the evening get increasingly more pricey. So that means the spread between the lowest hours of the day and the highest hours of the day is getting increasingly wider.
Yeah. So to summarize the duck curve, you have really high demand for electricity when the sun and the wind is not blowing or shining the strongest. And so you have wicked high demand when there's not a lot of generation, and then not a lot of demand when the generation is peaking. Is that a good way to summarize that?
That's a good way to summarize it, yeah.
We'll be right back after this message from our sponsor. Support for this episode comes from Sunnyside Digital. Are you ready for the next Bitcoin bull run? Get ahead of the game by building out your Bitcoin mining infrastructure now. Sunnyside Digital is your one-stop shop for everything Bitcoin mining, from transformers and switchgear to racks and miners. With a white glove approach to understanding your needs, they'll provide you with the hardware you need at the most competitive pricing possible. Say goodbye to your sourcing headaches and say hello to Sunnyside Digital. Contact their sales team today at sunnysideinc.ca or via email at sales@sunnysideinc.ca. All right, now back to the show. I appreciate the walkthrough. I genuinely didn't know, I've seen duck curve this, duck curve that. I think I even saw that, Texas went through a pretty crazy little period where everyone in the state of Texas knows what the duck curve is because of it. So thank you for that. I appreciate that.
Well, you might get a little bit more out of that because what's happened and what's everyone's silver bullet to save the grid and offset a lot of that transmission infrastructure spend that is needed is battery storage. And we'll get into the controllable load side in a second, but battery storage is supposedly the savior of the grid, and it does have a lot of benefits. But battery storage needs to be financed, and in order to have a financeable asset, you need certain cash flows that are locked in. And so the most liquid hedging mechanism currently is called a top two, bottom two structure, where you're essentially locking in what you think the spread is between the lowest 2 hours, the price spread is between the lowest 2 hours of the day and the highest 2 hours of the day. And that can go anywhere from, $50 to $60 a megawatt hour, in some cases even higher. And so now you're having the duck curve start to signal prices on the term to get battery storage assets built. So you're starting to see this snowball rolling down the hill. And then you have Bitcoin mining on the opposite side that can't necessarily generate, but it can defer its offtake and sell if it's co-located with a generating resource and sell that generation to the grid, or it can provide ancillary services and really be that flexible load to help balance out the grid instead of incentivizing, investment that may or may not be needed in some areas.
Yeah. Yeah. Yeah, Bitcoin mining, I think, is really going to disrupt a lot of the thinking, like you said, around just battery storage in general and all of it. To go back one more time before we move on in the conversation, you had mentioned that interconnection is really the foreseeable bottleneck right now, and then even out to 5 years from now, interconnection is going to be what slows down and really hinders all of this renewable energy getting on and supplying power to people. I have to ask, why is interconnection so slow to be built out? And I'm asking that because I'm thinking about, that it's great for Bitcoin miners right now because they can come in and co-locate on site at these renewable generators and soak up all of this, what would have been negatively priced power. But what is the delay? What takes so long on interconnect build out?
Well, you're going to open up Pandora's box
Okay.
here, but unlike most Pandora box openings, you're going to like this one. I think it synergizes with a lot of the discussions that we've had in the past. But essentially, with the interconnection queue, what needs to happen is the ISO needs to get comfortable with what's coming on their system, whether that's a load or generation. The ISO wants to know about it, wants to understand how those power flows are going to affect the grid and make sure that it doesn't pose transmission constraints on the system that is going to cause very severe price dislocations and potential disruptions to service. So the interconnection process um, really got bottlenecked because you had so many different incentives, whether they're tax incentives, state subsidies, um, cheap access to capital over the past, 4 or 5 years,
Yeah.
and then the whole ESG push. So everyone just went gung ho at trying to build renewable energy projects, battery storage projects, pretty much anything. And you also had miners interconnecting. You had the data centers from some of the large tech companies growing. Um, and it really put a strain on the ISO and the internal resources at the ISO to really evaluate and do the studies of, hey, what is this asset going to do to the grid? Um, so that's kind of one of the main bottlenecks. And it kind of spills into the next one, which is the transmission system. The transmission system in this country, everyone knows, is archaic, and it takes a long time to put together the modernization upgrades that are needed to bring areas where there's, a high supply of wind or a high supply of solar, and make sure that all of that renewable energy can be transported to a load center such as, Houston or Dallas or New York City. Um, and so without transmission build out and without incentives to fix the interconnection queue, we're going to be stuck in the same problem here.
Yeah.
Um, and I think the ways that we're going about solving it are trying to put more buckets of projects. Does your bucket fit into one of these 10 buckets? And now we're trying to say, hey, does your project fit in one of these 25 buckets? And that will better channel it to those experts. But the ISO needs to incentivize smart engineers, for lack of a better term, to want to work for them and want to go through all these process and studies. And you can equate it to, a lot of federal jobs. Definitely not an expert on this, but sure enough, if someone's worked at the ISO and the interconnection queue for say 3 years, you better believe that one of these renewable energy companies are going to start offering them some quite lucrative salaries to leave. So, is there something that can be done on the state side or the federal side to help maybe create some incentives to get some talented minds in to fix this process? Is something that I start to ask. But you
Yeah.
do see the federal government now starting to take action and kind of force more collaboration to start to address the interconnection and start to address the transmission problem.
Sure. Oh, I appreciate that. It's one of those things. You're not the first person to say that the interconnection is either the bottleneck or, really the problem with, expansion and growth of the electrical grid system. Um, I'm also curious, we're talking a lot about generation and demand, and the theme of the show is Bitcoin mining and the energy industry coming together. I would be really curious to get your take on, do you think there's any concern about this growth and the growth trajectory of Bitcoin mining as it relates to the utility companies, in so much as that, do you think the Bitcoin mining industry is going to stop becoming an actual tool because there's so much demand for it, or are we getting too much into game theory and speculation at that point?
I think that's a great point. And my frank answer would be no. I think that what we're seeing from the energy side of the business is that people are starting to realize that whether they like it or not, they're competing with other renewable projects on the grid. And those other renewable projects may have different subsidies, different investors, different tax credits. And in order for them to compete, they need to come up with two things: either pretty quick and strong trading expertise to manage through periods of curtailment, or start working with a controllable load behind the meter. And I guess it could be in front of the meter as well too. And that really comes to play in Bitcoin mining. And from our conversations that we've had with many of our clients, I would say go back a year ago. It's pretty much a nice conversation to have once over a beer, and they're not interested. Now we're having in-depth conversations with C-suites of companies, and I'd say large renewable development companies who have over 4 or 5 gigawatts already operational. They are using Bitcoin mining, data centers, controllable loads as a resource to either get their project financed or manage curtailment risk as a long-term solution, because that transmission line that they were banking on being built in 2025 is now potentially going to be built in 2030.
Oh my
And
gosh.
so what are you going to what are you going to do in those next 5 years? Are you going to cross your fingers and hope the market's kind to you? Or are you going to take a proactive, creative approach and partner with someone else that can solve your issue right now. And to put
Yeah.
some numbers to it, you know, we do it on the financial side and up against, say, if you did nothing and let your megawatts settle in the real time market,
Hmm.
we're adding about $5 to $9 a megawatt hour, which is pretty impressive when you look at a lot of these, incumbents and project owners are negotiating over 25, 50 cents a megawatt hour. If you partner with a miner, you could potentially be adding $20 to $30 a megawatt hour to your project cost. And yet, a lot of people still trot to those big energy conferences to go and argue about that 25, 50 cents for the next 15 years. And
50
that money
cents.
is pretty immaterial.
Wow. Yeah. Okay. So I see what you mean. There's going to be a tidal wave of interest in generation that's going to soak up all of the potential Bitcoin mining that could come onto the network. Um, wow. That, I mean, again, it's just, for me, this is becoming more and more not even Bitcoin mining. It's just an infrastructure play. This is just a really, really awesome tool for electrical infrastructure, which I think that has some staying power. So that's exciting. So, Chris, we've danced around it a little bit, and you've kind of touched on bits and pieces of what CWP Energy Solutions and what CWP Energy does. I would love for you to give me and the audience kind of the in-depth walkthrough. What does CWP Energy Solutions do, and how are you working with your customers?
Yeah, so for us, CWP Energy Solutions was born out of CWP Energy, and to boil it down pretty simply, CWP Energy got very, very good at trading renewable intermittency. What does renewable intermittency mean for power prices in in this certain area, and what does it mean in this certain area, and then capturing those spreads. And what I identified with our founder, our president Elaine, is the more and more renewable projects that get built, the more financial trading expertise these projects will need to first off manage risk. How are you going to survive through Winter Storm Uri? How are you going to survive through Winter Storm Elliott? Or as Nate did such a good job from Outlaw, a couple of weeks ago on your
Yeah.
podcast,
Yep.
basis risk. What if my asset is curtailed and my asset node is sitting at negative pricing, but I owe my off taker a certain amount of megawatts at a certain price? Now I have to eat that spread. And a lot of times that puts a lot of renewable projects in negative months during periods of high wind or high solar. So what CWP Energy Solutions does is we look to work and partner with clients. We augment their asset management teams, and we give them all of the trading tools that we use to make money on a proprietary basis and make our trading tools and our strategies available and say, hey, tomorrow you're going to be facing some curtailment risk and you're going to be facing a lot of basis risk that's going to negatively impact your cash flows. These are the actionable market decisions and strategy you should use to mitigate those negative cash outflows, and or these are the opportunities we see in the market. Here's how you capture additional revenue streams to offset those negative cash flows. So in summary, we really look to partner with a lot of renewable project generators that are facing heavy curtailment, or they have other risks that they weren't aware of when they got into the project. And then secondarily, once the risks are addressed, we optimize those projects. We leverage a proprietary platform that we built that can better predict day ahead pricing, can better predict real time pricing, and we make that available to clients. And we say, hey, in the end, it's a dollar per megawatt optimization equation. How can a generator sell their power at the highest dollar per megawatt value? And then what we realized after working with miners and talking with miners, how do we flip that equation upside down? And how do we optimize that dollar per megawatt value to the low side? As if you're a miner, you're a consumer of electricity,
Yep.
and the name of the game is how can you procure the cheapest amount of electricity?
Yeah.
So we work with mining clients that have a variety of contracts, some with the utility, um, some via virtual power purchase agreements, some purchasing from the grid on a daily basis, just as a generator would sell to the grid. And we're saying in the wholesale markets, we can help you purchase the electricity at the lowest cost by utilizing all the tools in our tool belt. And what we look to do for both on the generation and the load side is kind of scrap the incumbent fee structure, which is dollar per megawatt hour fixed fee structure. If I make you 10 million, if I lose you 10 million, you pay me that fee.
Hmm.
What we do is say, hey, we'll set the benchmark at whatever you're doing now. If you're a generator, how are you selling your electricity now? That's the benchmark. If you're a load, a Bitcoin mine, how are you procuring your electricity now? We'll set that as the benchmark. And then whatever we add in terms of increasing revenues for generators, we want a percentage of that over the benchmark. And then for miners, the amount that we reduce cost by, we want a percentage of that. That always aligns our financial incentives. It allows us to be transparent and be a partner that's, an actual partner rather than the black box model, which has, kind of plagued our industry for the past 15 years. And so that's kind of how we get involved in everything.
I really appreciate that. And what's really great to hear is that, I mean, you touched on it briefly, but what's good to hear is that you guys are approaching the generators, on behalf of the Bitcoin miners and saying, okay, look, how are you getting paid today? That's the benchmark, and then you work from there. I think that helps set expectations. You touched on it a handful of times. You guys really focus on renewable projects, and it's no surprise to any of the listeners or even people that don't know Bitcoin or Bitcoin mining very well. But Bitcoin mining gets a pretty bad rap for things like carbon emission and too much energy usage. And how, if at all, is CWP managing like the narrative around Bitcoin and Bitcoin mining being like producing too much carbon emissions or being too power intensive? How are you guys navigating that conversation? Or do you not even go into that with your renewable generators?
Yeah, I think for us, there's two things that Bitcoin mining and the energy industry has in common. Both of them are extremely complex to the regular citizen, and that enables the narrative to be spun relatively easily.
Yes.
And since people can't understand the complexities of it, it's very easy to write an article or to publish some, study in a silo and say, you know, this is bad, this is good. You can pretty much write that about anything. I think what we look to do is obviously, I think everyone wants to push for a cleaner grid, for a more reliable grid, and to offset carbon emissions. I think what people don't like to talk about is what they don't know,
Yeah.
about voltage control, about, transmission infrastructure that actually is redundant as opposed to, building a new project just because you're trying to make money on it. And I think by enabling partnerships, we're sharing the same story. And if battery storage can receive tax benefits and tax incentives and be applauded for their flexibility, I think so can controllable loads. And if battery storage can offset the need for an expensive transmission build because it's a flexible resource, so can a controllable load.
Hmm.
And I think what people need start looking at, and what we focus on with mining clients and renewable energy clients is when you have a new project, if you build five solar projects next to each other, they're just offsetting each other. They're not necessarily offsetting a fossil resource
Right.
that is needed for potential voltage control and reliability. Um, so we look at it and we run power flow models and say, hey, if you built a mine here, all it's doing is consuming stranded energy, and it's providing voltage control to the grid, and it's also providing a flexible resource that participates in ancillary services. And that is not increasing its carbon footprint or increasing the grid's carbon footprint. And so we try and look at it from a more holistic approach. And I think miners, especially of recent, are very, very cognizant and specifically tell us we're not interested in these type of resources. We're mostly focused on this resource. Or hey, we've had grid purchases for 30 or 40% of our power. How can we best offset that? And we don't want to just go and buy the cheapest renewable energy credit on the market. We want to purchase something that's impactful to the communities that we're a part of now. So that's the thought process that's been going on, and I think that thought process is only going to develop and grow into a more productive conversation.
Oh, that's fantastic. And what a good narrative. I hope that that narrative can start to spread into the just the general population. You're absolutely right with your opening statement to that question of when people don't get it, they're just going to publish the easiest, clickbaitiest type of article that they can. And unfortunately, that is, to the detriment of Bitcoin mining. So I really hope that the narrative I really hope that the narrative can turn and become this is going to soak up that renewable energy. It's going to soak up that stranded energy. That's great. So,
I think,
yeah, go ahead.
yeah, I mean, I think just as a perfect example for people, at least in our industry, look at when China banned Bitcoin mining and Bitcoin mining came to North America. Look where the Bitcoin mining was built, back in 2017, 18, 19. It was built in high renewable, low load areas, the Dakotas, the Pacific Northwest that had a lot of hydro, in West Texas, and now look at what's happening. You know, I said this in the beginning, but the cyclical nature of the markets is going to start changing that. So the Bitcoin mining is only soaking up stranded energy at the end of the day. And if you have a look at West Texas, there's a lot of wind there. There's a lot of solar. Everyone said, hey, this is the cheapest area to build a mine. Well, this past 2 months, if you look at it, the load zone west price that everyone who has the load settles at
Yeah.
was $45.
Yeah.
The liquidly traded area in North Texas that settled at $30. So load zone west was actually the highest priced area, and you saw a lot of mining um, bacon, or I should probably say invest a lot of capex into building big box mining projects. And what we see is you've invested all of this money in there, you're not going anywhere, and a majority of the days you are soaking up stranded electricity. But a miner has to have energy trading expertise to be able to stay online and operating during high priced or moderately high priced days. And I think that that's why we've been so involved in growing in the mining community, is because you're not going to spend tens of millions of dollars and then just shut it down for months at a time just because energy prices are too high. You need active hedging and active management, just like renewable projects need active hedging and active management, just like oil and gas industry uses active hedging and active management to survive during cyclical, unfavorable, conditions in the market. So I think that's what I really want to get across in terms of there's a cyclical nature in our markets, and it's just following where the high penetration of renewables is when it comes to the power markets and making sure you're prepared to capture the good times and survive through the bad times. If so, you're going to be a pretty successful company at the end of the day.
Yeah, I completely agree. And what's exciting is people like yourself and CWP Energy Solutions is coming into the Bitcoin mining industry in a big way and really helping with that strategy. And it's going to be really fun to watch the industry mature. And, it's for most people who aren't looking at it the way that we look at it, it's going to be that like, oh my gosh, how did this all happen so quickly? And it's like, well, it's been building up. So Chris, as we kind of wind down the conversation here, just to kind of bring things to a close, I always like to ask, what challenges might you foresee in this convergence of Bitcoin mining and the energy industry? Do you see any challenges in the near term or far future state of this?
Yeah, I think the biggest challenge that we're facing now is we've worked with our renewable clients. We perform very well. We've helped them, turn unprofitable projects into profitable projects, but they're looking for a long-term solution. They're in areas where more and more renewables are coming online. The transmission's not going to save them, so they need mining or they need a data center, whatever that controllable load is. They need something to help soak up that power during high, wind or solar hours. And they're interested in doing it. They're ready to do a contract today. The mining community or the data center or the controllable load is ready to do a contract today. The utility is not. And it's not for a lack of necessarily want. It's more for a lack of this is something that we haven't done before, and these are the contract structures and rate classes that we have. So why can't you just fit into one of those? And I think we've seen some of the larger utilities, or you look at Ottertail Power. I was on a call today, and Power got brought up as kind of a great business case where you have high
Yeah.
renewable penetration, you don't have a lot of load, and you are saying, well, I need 100 megawatts for mining. And they're saying, well, that's a little bit too much right now, but if we do 20 megawatts, we can do that. And what comes with that? It comes with transmission investment from the mining company. It comes for more tax benefits for the community. And it really starts to change the ecosystem and the economics that are in that area. But that's just a small microcosm where I think that story needs to start spreading to other areas and kind of help me and my clients who had wanted nothing to do with Bitcoin mining. Now they're fully committed to get involved
Yeah.
in Bitcoin mining. And now it's the utility that we need to say like, hey, we are not increasing your peak load. We are giving you a curtailable resource that you are able to control and curtail during times of peak and stress on the system. Also, the grid isn't going to be modernized by federal investment incentives. The grid is going to be modernized at a local level. And that comes from bringing in a data center, bringing in a miner, bringing in a controllable load, that solves the renewable curtailment issue and also uses that investment money to, you know, I should say, modernize their section of the grid. And if you have more and more people do that, now there's less tax dollars that need to flow from the federal level to, incentivize that transmission build out, and you start to see a bigger story. But right now, what we're trying to get through is that initial education phase, initial, proponent phase, and I think everyone pulling in the same direction and understanding that mining or large loads on the system aren't, something that's here to just soak up power. It's here as a flexible resource to modernize the grid, and the quicker utilities start thinking more creatively about that, I think the quicker we'll start to see a solution to reliability problems and also to a lot of the volatility that we've been seeing in the market.
I was really happy to hear that your foreseeable challenge is not like a foundational, fundamental, technical thing with Bitcoin mining, but rather it's an education piece. We can get through education. It'll be slow. It'd be a little painful at times, but we can do education. So that's exciting to hear that, from your perspective, which is a very deep background in both industries, you see education as the bottleneck there. That's great. Chris, I like to leave room at the end of the show for my guests to give a handoff. I want the utility companies listening and the Bitcoin mining companies listening to be able to get in touch with you and CWP. So please give a handoff for yourself and CWP.
Yeah, absolutely, Ben. Thanks for having me on. This has been a great conversation. For me, you can reach us at CWP Energy Solutions. My email is chris@cwpenergy.com. Would love to engage in more conversations on the mining side, on the energy side, on the education side, most importantly, and we'll be at Bitcoin 2023 in Miami. So look forward to seeing a lot of people there.
Awesome. Thank you, Chris. Yeah, this conversation's been, I'm sorry for the cheesy pun. It's been very energizing. It's the end of the day, over a happy hour.
Love it.
I would have cracked another beer and go another hour with you. This has been great. Thank you, and you take care.
All right. Thanks a lot, Ben. Take care.